Hey all, welcome to ShareTreck. This is Raj here. Friends, the day was very interesting. It started so low with fear of what would happen when the Institute of Supply Management presented the PMI numbers. Service PMI numbers were worrying the market. So that's why they started low, but immediately they picked up, and at around 10 o'clock, they got the verdict. So let's check out what's happening in this interesting day. Today I may not be doing too much of technical analysis. It's just going to be high level. As you can see, I was out doing my realtor thing. I have a listing that I had to put up. So there were frantic work going on during the day. But I'm going to catch up with what happened in the markets. Let's get started. So earlier in the day, the Institute of Supply Management released week service employment numbers at around 10 a.m. Up to 10 a.m., the market was going down, and then at 10 it started picking up because the fear of very strong ISM services PMI number did not materialize. Instead, it came in at around 51.4 as against the expected consensus reading of 52.7. This led to the market rebounding to reach the day highs, only to wait and hear Fed Chair Powell express sentiments that can be aggregated to two simple concepts, in my opinion. The first is that rate cut is not in sight so far, and the second is that rates may stay higher for longer. It's understandable as the Fed does not have convincing data points either way. The snapshot of the day can be summarized as saying that it started low and dropped lower and then rose to day's high, only to drop back a little bit after and then consolidating around 2:30 p.m. So overall, I think it was a volatile day, and we had QQQ up 0.22% by the end of the day, and we use QQQ as a proxy for Nasdaq. Nasdaq closed up 0.21%, almost around the same ballpark. And at the time of recording, QQQ was up 0.10% post-market. We also have news that Amazon cut hundreds of cloud jobs, and the stock saw its share price jump around 0.95%. And I think when jobs are cut, the market generally rewards the company because the assumption is that employment being the highest, one of the biggest expenses in the income and expenditure of any company. Reducing the employees means reducing employment costs, and which means adding to the bottom line, assuming that you maintain your output. And if you maintain your output with less expenses, that means you're improving your productivity. All of these are positive, and Amazon got rewarded. I think Amazon has been doing this kind of rationalization since the new CEO took over from Jeff Bezos, and he has realized a lot of cost savings and improved productivity. So always a good thing. Then one of the other aspects that I wanted to talk to you today, which we generally don't talk about in the channel, is bond markets, because I do not invest in bonds. I am a retail investor. I do not personally have access to bonds. But I am starting to think that I would like to get into some bond ETFs. I am searching for some. If any of you know any good bond ETFs, just mention it in the comment section. I would like to consider that. I will tell you my reasons for it, because I'm seeing a lot of factors that are happening, and I want to take advantage of that. I'm close to 60, and I need to diversify my portfolio. I need to have some bonds in my portfolio. I don't have any at this point of time. So I'm thinking that the interest rates are as high as they could be as per Fed. The Fed is not signaling any increase in interest rate, and the talk is all towards cutting the interest rates. This is one data point that I have in mind. The other data point is that oil price is continuing to go up. It's continuing to go up because economies are starting to recover, and the OPEC has done an oil cut, and as a result of which the oil price is starting to creep up. And I would like to show you the oil price chart. There is something in there that is very scary to me. Let me take you there before I continue my monologue. Here we are in the oil price chart, and as you can see in this chart, I have tried to visualize a potential cup and handle formation. Just like in baseball, if you have players in all the three bases, and then if the batsman were to make a hit, you are likely to get more than one runs because you have loaded the bases. And if he does a home run, then you're getting 4, I suppose. I'm a cricket guy, but this is what I have learned about baseball. So this is a similar kind of analogy. The bases are stacked, and we are waiting for a home run, and the home run can come with the formation of a handle, in which case I am looking at oil touching somewhere around 101.23. Now what will happen to the market at that time? The Fed will increase the interest rates. The market will be afraid that the Fed is going to raise the interest rates, as a result of which all the markets will fall down. And if you look at where we are with QQQ, we are quite high. We are perched quite high. We have broken through all-time highs, and we have gone quite high. So we have already started showing a little bit of weakness out here. And one of the main forces that was driving the market for us was NVIDIA. And as you can see, NVIDIA has also started weakening. And I think NVIDIA could go all the way down to 797.45 if the proper conditions prevailed. But right now it seems to be tracking this diagonal line of resistance. So the verdict is still out. I need to check what's going to happen. Right now there's a bullish setup, but it could change on a dime. Momentum is falling. MACD is getting more and more bearish. So in the backdrop of all this, I'm thinking that if we look at oil price could go up, and if oil price went up and formed a cup and handle pattern, and then we met our target price of 101.30, that means we'll have a higher interest rate. Now if this did not happen and oil starts coming down, because many times cup and handle fizzles out, if oil starts coming down and as a result there will be lesser inflation, the markets will be more benign, and then we are looking at the other factor, which is going to be the labor. If the immigration and adoption of AI and all those aspects start making company let go of people just like Amazon did, and if the banks start using AI and start letting go of salespeople and all that stuff, we are likely to see those things happening soon as AI companies start packaging and offering solutions to industry. So I'm not saying that it's going to happen tomorrow, but we are likely to see the next data point being the labor market. If the labor market starts easing a bit, I think that the Fed will be happy to cut rates. Anyway, we are already in April, and if we are looking at rate cuts even in the last quarter of this year, it's not too far away. So I'm thinking that if rate cuts started happening, then the bond face values will go up. And if anyone buys a bond at this point of time, and if they have a yield of around 5% or something, and when the interest rate starts getting cut, bond face values will go up because the yield has to go down. And in that process, you have a very good choice. You can continue to take that high interest rate and also enjoy the high face value of the bond, and you could borrow against the bond and deploy it into the market to buy stocks, which will be at that point of time looking very attractive because interest rate is coming down. So that's the way I'm looking at it, and that's why I think I want to look at bond ETF. I've always found it difficult to get my head around to thinking about bonds because it's got a inverse kind of a logic. So I'm going to actually, after this session, I'm going to sit with a paper and pencil, and I'm going to work out all these things and see how the yields will move, and then I'll decide what I want to do. I'll also start checking out bond ETFs and see what's the yields on those bond ETFs, and whether they're giving any distributions, and what does the total picture look like. Just want a small stake out there. And so that's what I'm looking at. And what else do I have to say about today? I think I would like to talk a little bit about crypto. Bitcoin was up 1.1%. I think when the US dollar starts becoming weak, I think you'll see Bitcoin and gold go up. And if Bitcoin and gold go up, conversely, you can say that the expectation is that the interest rates are going to come down, not go up. So as the interest rates start coming down, I'm thinking that Bitcoin will start going up. So that's again another positive. I have a chart of Bitcoin in which I am looking for some confirmation. I can show it to you briefly. Here we have the chart of Bitcoin. Each candle is a one-day candle. And I'm just going to expand this a little bit so that you can see that we had a bullish pennant, but we have broken down below the bullish pennant. But then there has been a reversal out here because we are going upwards. We are not coming down further. we have a support of the 50-day exponential moving average. There's a potential death cross forming between the 9-day exponential moving average and the 20-day exponential moving average. But I want to see what happens because momentum is starting to pick up. MACD is very bearish, but as long as the momentum starts picking up, I think we'll start to see MACD going towards the signal line. So the next couple of days is going to give us an idea what's going to happen with Bitcoin, whether it's going to fall down or it's going to go along this bull channel. So that's the other thing I had to talk to you guys about. Then in genomics, we had just 4 stocks which did well today. One was Verve, which was a big dead cat bounce because it had sold off so bigly that bottom fishers have picked up something. I don't think this is anything great to talk about, but we'll see what happens tomorrow. We can always take the 4.69% gain in our stride. DNA was up 3.81%. They have just taken over another company, or they have a collaboration with another company, something like that. I'll make a separate video on that for you very shortly. Bionanogenomics was up 2.26%. Again, looking very weak on the chart. And Allogene was up 0.49%. Also, this is looking very weak on the chart. So that's what we have in genomics. And if we go into AI, I think Micron technology has done extremely well with a gain of 4.29%. Chart is very extended, and I think it has to consolidate a little bit tomorrow before moving up further. MACD is super bullish, and RSI is heavily overbought. Meta is up 1.88%. Chart is starting to look good. The support worked out and we are moving upwards. Momentum is also picking up nicely. And as a result of momentum picking up nicely, we have got the MACD moving towards the signal line, and that also sounds positive. So I'm looking forward for Meta to gain tomorrow. And then we have the Broadcom stock, which was up 1.83%. The chart is looking very good. It will go up again further tomorrow. We have FNG, which was up 1.69%, got stopped by this diagonal line of resistance out here from the bear channel that we had drawn. So the biggest test is going to be that whether it's going to go across. And I'm feeling optimistic because momentum has sharply picked up, which will again influence the MACD to cross over the signal line in a bullish manner. But the positive for me is that we have crossed the 20-day exponential moving average and converted that into a support. And then we have the 9-day exponential at 328.22 and we are at 328.60. So both of those we have crossed. So it's just this diagonal line of resistance we had to cross, and I think we'll be able to do that tomorrow. And then I think I'll breathe a sigh of relief because then it could give us the possibility of forming a parallel bull channel along to this green line of support. Next, we look at Qualcomm, which was up 1.68%. And chart is starting to look very good. MACD is about to cross over the signal line. Momentum is pretty strong and fast. And RSI has plenty of room before it gets overbought. Oracle is good at 1.53%, but the chart is not looking that great. Momentum is picking up and it has to influence the MACD. Till then, I'll wait for that. ASML was up 1.40%. AMD was up 1.16%. I am starting to see some prospects of AMD recovering. So I might watch AMD tomorrow and see if I would like to enter AMD to do a bit of dollar cost averaging on the way back up. And we have Tesla, which was up 1.05%. The chart is not looking that great. Amazon was up 0.95%, effortlessly riding this bull channel. So looking very good on the charts as well. MACD is also turned bullish. And then we have ARM up 0.83% and Applied Materials was up 0.62% and SMCI was up 0.56%. Apple was up 0.48%. Apple is in a very bad situation. Their talk about a household robot is the thing I believe which has given it a little bit of jump today, but it was pushed down by the 9-day as well as this horizontal line of resistance at 170.83. So that was the combination that pushed it down. We'll see what happens tomorrow. Google was up 0.32%, looking very good on the charts. And it's a bit overbought and it may consolidate before going up further, but MACD is looking pretty good. So that's the story. And again, the biggest story again is INTC, Intel Corporation. Huge loss of around 7 billion or something in the foundry section that pushed the market down 8.22% for Intel stocks. and we'll have to see what happens tomorrow. All the money that they got from the government, I think, is already spoken for. So that's about it, my friends. Nvidia, as I mentioned earlier, is starting to go weak, but it's fundamentally a good stock, and there's a good story ahead of it. So personal opinion is that it's a dollar cost averaging opportunity, not financial advice though. So with that, my friends, I would like to bring this video to an end, and I'll catch up with you again in the next video. Till then, see you later. Bye for now.